government securities market involves various players, including the government as the issuer, financial institutions, investors, and regulatory bodies. Financial institutions such as banks and investment firms participate in trading and underwriting government securities. Investors can include both domestic and international entities seeking fixed income opportunities. Regulatory bodies like Securities Commission of Malaysia oversee the market to ensure compliance and transparency. The Malaysian government securities market is populated by a diverse range of participants, including the government as the issuer, financial institution, investor, and regulatory agency. Banks and investment firms are among the financial entities that trade and underwriting government securities. Investors might include both domestic and foreign companies looking for fixed income possibilities. Regulatory authorities such as Malaysian Securities Commission monitor the market to guarantee compliance and transparency.
Okay, for the next interesting part, which is what are the reasons behind the instrument issued for the Malaysian government security? First of all, issuance of Malaysian government security allow the government raise funds to finance various projects and government expenditure. This fund might be allocated to infrastructure development, social welfare programs, or other public spending needs. Next, government also use debt instrument like Malaysia government security to manage existing debt by financing, refinancing, or rolling over maturing security. This helps them in maintaining a healthy debt profile and managing debt obligation effectively. Moreover, Malaysian government security also can be used as a tool for implementing monetary policy. For example, by buying or selling this security in the market, central bank can influence interest rate and control liquidity in the economy. Lastly, the reason behind the instrument mentioned for Malaysia government security is Malaysia government security might attract investors seeking a secure investment option, which is they are typically considered low-risk investment due to the backing of the government. This can make them attractive to both domestic and international investors.
What is the benefits of investing the Malaysian government securities? There are 6 benefits. So, let's go one by one. The first one is stability and safety. It is considered as a relatively safe investment and it is low risk. It is very suitable for conservative investors who are looking for stable returns and tend to pay a lower interest rates than corporate bonds. The second one is fixed income. It provides regular interest payments to investors. Also, it offers a predictable stream of income and it can attract investors who are looking for a stable return on their business. One is liquidity. It is usually traded on the secondary market. These securities provide investors with a level of liquidity if they need to sell their holdings before maturity. The next benefit is tax benefits. There may be some tax advantage associated with investing in these government securities. The tax level can be adjusted according to the individual circumstance and comply with the established local tax regulations. It is issued by the Malaysian government and Malaysian government securities. It is fully supported by the government's ability to pay back its debt obligations, which can contribute to the stability they consider. The last one is variety of maturities. MGS provides various maturity terms for each investor. So, each investor can choose a maturity period that parallels their investment and achieve their investment goals.
Did you know that the Malaysia government security are long-term debt instrument that issued by Malaysia government to fund its fiscal obligation? However, this Malaysia's government security also manage long-term financing needs. So here I'm gonna talk about the characteristic of the Malaysia government security. First of all is there is a long-term maturity with it is ranging from 3 to 30 years. This make them suitable for investors seeking for long-term fixed income investment. Next, the Malaysia government security is fixed interest payment, which is the Malaysia government security pay regular fixed interest payment, which is known as coupon payment. So the coupon is determined at the time of issuance and remain fixed throughout the life of the security. Move to the next is Malaysia government security also is low risk, which is similar to treasury bill. However, Malaysia government securities considered relatively as low risk investment because they are backed with the creditor of the Malaysia government. Last but not least, the characteristics of the Malaysia government security is diverse investor base because the Malaysia government security are accessible to a wide range of investors, including individual, institutional investor, bank, and foreign investor. They can be purchased in various denominations to accommodate different investments.
MDS is normally medium to long term up to 30 years. MTS are fixed rate coupon bearing bonds with bullet repayment of principal upon maturity. Coupon payments are made semi-annually. MTS are issued via competitive auction by Bank Negara Malaysia on behalf of the government. Successful bidders are determined according to the lowest yield offered, and the coupon rate is fixed at the weighted average yield of successful bids. And annual calendars that outline the timing, tenure, and issuance method, new issue or reopening will be announced at year-end for subsequent year issuance to enhance market transparency and certainty. The actual issuance size will be announced a week before the issuance date. Typical issuance size ranges from 1 billion to 4.5 billion depending on the financing requirement of the government. The secondary market for benchmark securities is liquid with average transaction volume varying from 100 million ringgit Malaysia to 500 million ringgit Malaysia. A standard transaction is 5 million ringgit Malaysia per lot. Malaysian Treasury Bills (MTB) short-term security issued by Bank Negara Malaysia (BNM) for the government working capital requirements. MTB are issued with original maturities of 3 months and 6 months and 1 year.
In conclusion, our group has done a finding about Malaysian Government Securities, MGS. The Malaysian Government Securities is populated by a big range of participants that involve issuer, financial institution, investors, and regulatory bodies. The funds are allocated for infrastructure development, social welfare programs, and other public spending. MGS is also used to manage existing debts by refinancing or rolling over maturing securities. So, the funds raised through MGS can be utilized for development projects and initiatives which can contribute to economic growth and stability. The MGS is known for its stability, safety, fixed income, liquidity, tax benefits, variety of maturities, and government support.